Hello everyone, how's it going? Hope all is well. Happy Valentine's to everyone out there. Today's video will be over smart money concept, how I use it to trade US30. I know majority of you who trade indices love US30 because of the volatility it possesses. Now I found out that smart money concept approach is better for me, and I want to share with you. If you can use it, you will enjoy it and thank me later. So stay tuned to the end. So we have four things we put into consideration on this strategy. Number one is identifying your buyers, marking of structures, entries, and trade management. These are the four things we use. We start by identification of our buyers. You know, my last video I told you how to identify buyers using fair value, but on this approach we use single candle to determine the buyers for the day. So how do we do this? We start by what? If candle close bearish, this is a daily time frame. This is a daily candle. If after the intraday price action on 12 o'clock a.m. every day, market printed new daily candle. Now, if that candle definitely closed bearish, we anticipating that it will do what? The next day, the market will still continue going down. That's how I do it. So 10 something on bearish side. If the market closed bullish after intraday price action on 12 o'clock a.m. every day, we anticipate that the markets will continue doing what? Going up the next day. Does that make sense? So that's how we can identify our buyers using single candle. But there's one thing I want to share with you which is very important. Now on this section here, let's take for instance that the market was printing out bullish candle, bullish candle, bullish candle, bullish candle until this day. The market picked out bullish candle on this day. And the next day, maybe let's say today is Monday, on this candle, let's say it's a Monday candle, and on Tuesday candle is closed bearish. Then on Wednesday candle, after the Tuesday candle closed bearish, then we're hoping that the Wednesday candle should be bearish, that the intraday price action should be bearish as well. And after Wednesday, on Thursday, we have what? We have get try to push down, then the market close bullish the next day. Then anticipation for the next day, which is on Friday, is that the market may experience bull run, that is a bullish movement. Then I want you to pay attention here. Whenever you spot this on your daily chart, just bear in mind this is a very strong resistance. So whenever you're trading, you need to, so if the market hit here, maybe it may change the bias for the next week to come. Hope you understand. So that's how I do it. If I try to understand it here, because when we move to live chart, it may seems to be somehow difficult. So the watch as many times as you can your structure. We mark our structures like this. So this is what? This is bearish candle. The daily candle close bullish, as the daily candle close bullish, we know that intraday price action will be bullish as well. Is 70-30. Nothing works 100% in trading. We're dealing with probability, so anything that happens, you know that it has happened. You need to face the reality. So now pay very good attention. This is how we mark our structures. As we have spotted, our last candle is a bullish candle. So now we'll be hoping maybe the next day candle, the intraday price action for the next day will continue bullish. So this is how you mark your structure. Once the price starts printing the intraday price action movement, you need to see this movement. If the market break out from this zone, this is very high here, it's break out from the high of the daily candle, you need to see markets breaking off a structure. This is a break off structure, and it doesn't end there. After your break off structure, you need to see market gives you endorsement. The first pullback after the market breakout from a structure is what you pay attention. That is your endorsement. Then if market comes back, if there is anything to mitigate at this point, if there is anything like other block or other flow to mitigate at this point, here should be your entry. You understand? So that's how I do it. Then if the market opens after you spot your daily candle is bullish, and the candle sinks, and the intraday price action moves down to this point to sweep liquidity, you need just You don't need endorsement to be entry here. You only need to see market change character. Once the market change character will be in the trade, then this is how the market change character. Maybe this is your last pullback when the market was moving down. Then if you take up this high, this recent high here, you will do what? You will find anything mediatable on this zone, maybe other flow or other block. But in this case, I use other flow where because the market will show sharp reversal, because our bias is bullish. You understand? So now market, we may get something here and push up. Then another scenario you may experience is market showing you liquidity. So maybe market try to push down more. This is called liquidity sweep. Once the market sweep liquidity at this point, you'll be hoping that the market will do what? You'll be hoping that the market will go up. So change of character and liquidity sweep is what you'll be looking for when market pulls down after seeing your last day candle printed bullish candle. Is that clear? So now let's move to the example for you to see how we put all these things together and how it works on US30. Stay tuned. So now let's take a look at this example. This is US30. The first thing we say we do is to identify our bias. Looking at the overall trend, you notice that the market was in uptrend. That's a very good one. And here, last candle that we used to determine our bias close bullish. That's very good. So what are we anticipating from now after the closure of the candle? We are thinking that the candle, the next day intraday price action will still close bullish. And if you watch closely here, market sweep up this resistance zone. So that's very good addition. So we have enough volume to trade. Now we move to a 15 minutes time frame to mark out our structure. So let's move down to lower time frame, which is 50 minutes. Now we have the only visible zone, the only visible high we have here is this high. So we hope when the market break out from this high, beautiful. You see markets have breakout from the zone. Do we have any other block here? We have unmitigated other block. This is unmitigated other block. So we should draw the line. There's an attempt from this candle to mitigate it, but it doesn't mitigate it. So we have to draw out our other block. This is the first pullback before this breakout. Can use this as an endorsement. If you push out more, so let's see what will happen. Then we put our pending order inside the zone. But if you want to refine more, you go down to 5 minutes time frame to find flip, that is find change of character. You enter at the 5 minutes order block of fair value gap. But we are not teaching about that today. We are entering directly. So let's bring out all. So let's see what will happen. Sorry. Yeah, see how the candle tap into the zone, moves up. So as this happens, you can still look for another entry. So here becomes our another breakup structure and so on. So that's how to do it. Let me move to the other example to show you how, if the markets sweep liquidity on the other side, how you can still trade it, because we are looking for two things when we, after anticipating our bias, trading US30. That's how I trade. So let me show you the other example before we close this video. So now this is another example. Let me show you how you can trade it either way, because two things happens after identification of your bias. Is either the market break off and start moving high if the bias is bullish, or the sweep liquidity. So this is how you do it. Now the last 2 days before this candle was bearish bias. This is bearish, this is bearish. Now what happens here? The market closed bullish the next day. So now currently we are hoping that the next day candle will be bullish as well. That is intraday price action. And mind you, we have very good resistance zone here. So we have small volume to trade before, that is, our eyes will be here, because this may be a turning point of the market to continue this bearish bias. So you need to pay attention. Let me mark it out for you to know where you'll be targeting this occasion call. So let's move down to try the price action for you to know how it is done. So you need to mark this, but it's not necessary. Let me take it out. Now we are in 15 minutes time frame after identifying of our bias. So let's roll the candle to see what. So let's see what happens in the intraday production forecast for buyers. Remember, we start marking out lows and high. So the market break out from this zone. This is a very nice zone. It happens too early. Take out zone. So there's no inducement here. So that's why I did not pay attention to this other block. Do you understand? Now we roll the candle more to see what will convince us to be in the market. Remember, this is the only recent low that is still valid at this point. So we mark it out. Maybe if we have sweep, that will trigger us into the market. When we have sweep, remember what I said, we need to see markets change only character. We don't need inducement at this point. Then we target any recent highs that is on our way. If you're greedy enough, you target 1:5, 1:6. But for me, 1:4, 1:5 is okay for me anytime I spot good opportunity. So let's see if the candle may take up this low. Beautiful. The candle have taken up this low. The only thing I need to do here is to look for market to change character, taking out the recent low high. If the market take out the recent lower high and comes back, if there is any that block that's still unmitigated, that should be our entry. So now we wait for breakout for wait for markets to break out from that zone. Beautiful. It peaks out with a very big huge candle that shows enough momentum for us to be in the market. Currently here is my other block, and I'll mark it hoping for market to come back and mitigate the other block. Then I'll be in profit. As simple as that. So before you as an ICT trader, before you can wait for 9:30 open, we have been making profit before the 9:30 New York time where your timing starts. You see the difference between smart money concept and CT trading US30 with pure mechanical trading. Now let's see if this other block will be mitigated, and I'll set my target. So here should be my first target, and second target is at the zone. So I will target this highest point for the sake of this video. You can squeeze more to look for more edges, but here is my target. I'll lock my profits when the market hits here, but here is my ultimate target. So let's see what happens after. See, beautiful. Market have tapped into this other block. So let's hope if the market hits our take profit like the setup did. So everything is simple. It depends on your approach. So if you want to use this strategy, I'll urge you to exercise patience, taste as many times as you can. I'll give you how to identify buyers. I've told you what to do. So you have no excuse for not making profit with US30. I hope this is clear, and I hope I tried my best. The only thing I need from you guys is your like, sharing my videos to your friends who are still struggling. I hope this helps. I want to see a comment. I like to read that comment. So if you appreciate this video, I need to see your thumbs up, comment below, and share with your friend. That's all I need from you. Thanks for watching. See you in my next video. Whenever I find good opportunities like this, I will share with you guys. Thanks for watching. See you in my next video. Bye for now.